Let's move on to like it, love it, leave it. This week's selection is some earnings and events that are happening this week. As we all know, this is what Brendan's got 30 seconds to give a quick summary of each one. So, Brendan, are you ready?
Let's roll.
All right, starting with CarMax, earnings on Thursday.
I'll leave it. Broke support through 81.50. Looks like it wants to extend lower.
Okay, Jefferies, they have earnings on Wednesday.
Leave it. There's something going on with the brewing bad with the banks. I don't know if Jefferies is a leading indicator of it, but the chart of the BKX is breaking lower, and Jeff broke hard to the downside this past week. Something's going on there.
Tell us what has happened to the sterling.
Well, there is many drivers happening, right? But as you clearly mentioned, and there has been a significant devaluation over the pound. Right now, it's 34% depreciated against the dollar when it's benchmarked out for PPPs or purchase parity or fair valuation against the OECD estimates. And at the moment, we have a significantly risk-off environment globally.
I think we're going to see a lot of volatility here. The market's very oversold. The S&P 500 reached a level of oversold that, in the past has coincided with counter-trend rallies. And so, in my opinion, that's really all this is likely to turn out to be here. A nice little 1% pop. I would use it to sell them all if you can. We believe the market is at the precipice of a major decline. And a lot of people might think that sounds strange since we're already down 23, 24%. Wasn't that already a major decline? We think this could be, akin to what we saw in 1987, not necessarily a one-day crash of 20%, but over the next 4 to 5 weeks, it would not surprise us to see the market down 20% from where we are today.
Right, and what you're saying is, look, we know that there's 21 million Bitcoin that will ever be created, but you can have unlimited Bitcoin derivatives. So does that change the value of it because you could theoretically have exposure to Bitcoin without owning Bitcoin, and does that change the value? And honestly, I don't know. Like we can probably look to gold and go, okay, there's gold derivatives. How has that affected the price of gold? The fact that you and I can have exposure to the price of gold without ever owning a bar of it.
Zero interest rates, free money makes everybody look like a genius. I mean, I even look smart under that situation.
Even you.
But it's not the case, and now people are learning the other side of that equation. The other thing that free money does in zero interest rates, it makes people lazy.
Yeah.
And it makes corporate America lazy. And what do I mean by that? Companies don't really have to focus on their business. You buy back your stock, you pay a dividend, the stock goes higher, you look really smart, and you're not focused on really what's going on beneath the surface. Now, as the world has changed quickly and precipitously, people now need to focus on their business. This happens to be a very good thing, by the way. The problem is the pain to get to the other side is what we're feeling right now. And it's not going to end anytime soon.